Okay, so those of you not familiar, there's something called an investment tax credit that you get when you purchase a solar system. There's a base credit that's 30% of the contract value, and then there are adders of 10% each for low income, for an energy community, and for domestic content. And so when you purchase a system from us, we will go through how the tax credits work, what additional incentives you might be eligible for, and how you can monetize those tax credits on your tax bill. And so the 10% for low income communities, it's a very specific bonus adder. It's determined by your property location. There's certain basically zip codes that are eligible for this low income community adder. It's the only one that you actually have to apply and get approved for before you start the project. The next one is the 10% energy community adder. Almost everywhere in California qualifies for this adder, so it's pretty automatic that we include this. And it also is determined by property location, but pretty much every zip code we operate in gets this adder. We'll go over that, make sure when we propose a system. And the last one is domestic content adder. This one is determined by the amount of domestic content used in the actual materials that we use to build the system. And it changes, the ratio that you have to use every year changes, and it does cost a little bit more money to get the domestic content, to purchase the domestic content. So I always like to say that it's really a 6 or 7% adder, because it does add about 3 or 4% in overall cost, but it makes sense in most projects to get the domestic content adder. So that's how the investment tax credit is broken down. And the rules on this are changing over time. And so there's urgency around procuring a system. And, we'll talk a lot about safe harbor and how to utilize safe harbor to ensure that the project gets these tax credits.